with Japan's domestic security token market projected to cross 1 trillion yen and exceed 100 active projects in 2026. Navigating in the country's new stablecoin regulations and RWA legal frameworks is the ultimate competitive advantage for global infrastructure providers. The Japanese market is no longer a sandbox. It is a highly regulated, massively regulative implementation zone. I'm Keisuke Steve Wakyodo and venture partner at Oniri Capital. Welcome to episode 78 of Japan Digital Asset Weekly, part 2 of our April strategic overview. Last week, we covered the historic integration of crypto into the FIEA and 20% flag tax reform. Today, we break down the fundamental plumbing to deploy capital safely in Asia this fiscal year. Institutional teams must understand 3 critical pillars of Japan's ecosystem. First, the multi-tier stablecoin structure. Second, the legal reality of RWA tokenization. And third, strict AML compliance under the FATF mandates. Let's dive in. Pillar number 1. Japan's stablecoin ecosystem. Japan has established a highly regulated 3-tiered issuer structure for stablecoins: banks, fund transfer operators, and trust banks. In 2026, we are seeing a fascinating bifurcation. The most anticipated development is the rise of the Type 3 trust-type electronic payment instruments. Because these are issued through a trust structure, they are entirely exempt from the strict 1 million per transaction limit that restricts standard fund transfer operators. A prime example is JPYSC, a Japanese yen stablecoin co-developed by SB Holdings and Started Group. With Shinsei Trust Bank acting as the issuer, JPYSC is purpose-built for massive institutional use cases, such as corporate treasury settlement and RWA transactions. On the retail side, Type 1 stablecoins issued by fund transfer operators, such as JPYSC, have a strong first-mover advantage, but face growth hurdles due to the 1 million transfer limit, a safeguard designed for strict anti-money laundering enforcement. Pillar number 2. Real-world assets, or RWAs. Global institutions project the tokenized asset market will reach $5 trillion by 2030. However, foreign executives must understand the unique legal challenge blocking instantaneous tokenization in Japan: the civil code's perfection requirement, or Taikou Youken. Under current Japanese civil law, legally transferring ownership of a receivable requires formal notification or consent using a physical instrument with a fixed date, like certified mail. You cannot simply transfer a tokenized real estate asset purely on-chain. The physical requirement destroys the instantaneous nature of blockchain settlement. To solve this, Japanese institutions rely on trust schemes. By depositing the underlying physical asset into a trust bank and tokenizing the trust beneficiary rights as a security under the FIEA framework, ownership can be transferred legally and digitally. Pillar number 3. FATF and VASP compliance. Now this innovation can survive without bulletproof AML standards. The Japanese government is operating with extreme urgency ahead of the Financial Action Task Force's 5th mutual evaluation in Japan, scheduled for 2028. If Japan were to land on the FATF grey list, it would trigger a devastating chain reaction, raising funding costs for all domestic financial institutions. Therefore, regulators are enforcing uncompromising compliance. For crypto exchanges and VASPs, the turbo law is strictly enforced, and authorities demand advanced due diligence and risk-based monitoring, especially concerning transactions with overseas exchanges and unhosted wallets. In Japanese business culture, success is dictated by WA, or harmony. Foreign entrants must not just flaunt technology. They must build sustainable business models that harmonize safely within existing FIEA and Payment Services Act frameworks. At Wakyodo, we provide Japan Lead as a service, acting as your boots on the ground to manage regulatory complexities, GTM strategy, and institutional stakeholder relationships. If you need a partner who understands both the legacy banking systems and the frontier of digital assets, visit our website today to set up an initial consultation. That concludes our special 2-part April series. Thanks for watching, and see you next Monday.